I think a lot of people look at Bitcoins and immediately jumps to the biggest conclusion possible. They hear somebody's talk about self-custody or financial freedoms, and the next things you know, the conversations turn into, oh, so Bitcoin is trying to replace banks? And every time I heard that, I find myself stopping for a second because I don't think that's really what is happening here. In fact, I think that question sends people down the wrong path before they even understand the problems Bitcoin was built to solve. The reason I say that is because most people are perfectly happy with the banks right now. The paychecks showed up, the debit card works, the mortgage get paid every month, they can transfer money, buy grocery, and go about their day without thinking much about the plumbing beneath the system. So when somebody comes along and say Bitcoin is going to replace all that, the average person immediately tune out. Why wouldn't they? From the point of view, nothing looks broken. But the more I thought about it, the more I realized Bitcoin isn't really asking people to abandon every financial service they use. It's asking a much smaller question, but at the same time, a much bigger one. What happens when you no longer need somebody else's permissions to hold your own money? That sounds simple until you sit with it for a minute. Think about your checking account. You probably look at the balance and think, that's my money. Legally, it is. Practically speaking, though, there is another layer involved. The banks keeps the records. The banks processes the transaction. The banks decides what procedures needs to be followed. And most of the time, none of that matters because everything works exactly the way you expect it to. The system fades into the backgrounds and life moves on. Then every once in a while, something reminds people that there is a difference between owning something and controlling it. Maybe a transfer gets delayed. Maybe a withdrawal limit showed up. Maybe a business accounts get flagged. Maybe somebody living in another country experience something far more serious. Suddenly the infrastructures that nobody noticed yesterday becomes the centers of attention. That's why I don't think Bitcoin's values is easiest to understand during normal times. During normal times, convenience usually wins. Most people don't wake up looking for more responsibility. They want things to be easy. They want things to work. There's nothing wrong with that. What caught my attention about Bitcoin years ago wasn't the idea that banks would disappear. It was the realizations that another option existed at all. Before Bitcoin, if you wanted to store values digitally, there was always an organization sitting in the middle somewhere. A bank, a payment company, a government-approved institution. Somebody has to maintain the ledger. Somebody had to keep score. Bitcoin's introduced something different. Not a company, not a CEO, not a building with a headquarters downtown. Instead, it's create a network where ownerships could be verified without handing control to a central operator. The first times that really clicked for me, I realized I had been asking the wrong question. The issues wasn't whether banks would survive. The issues was whether people should have a choice, because those are two completely different conversations. And if tomorrow every bank on earth remained open, Bitcoin would still matter. If every mortgage lender kept issuing loan, Bitcoin would still matter. If every credit card company continues processing payment, Bitcoin would still matter. The reason was nothing to do with eliminating those services. The reason is that for the first time, a person can decide how much of their financial life they want to place inside a traditional system and how much they want to control directly. That's a super different. But I think it's where most of the misunderstandings comes from. When somebody hears the phrase, be your own bank, they often picture a world where everyone is expected to manage every detail themselves. That's not how I see it. Some people will always prefer convenience. Some people will probably pay professionals to handle certain responsibility. And some people still don't want to think about private keys, wallets, or security procedures. That's completely understandable. What Bitcoin does is remove the requirement. That's the part I kept coming back to. For decades, participations and dependence were basically bundled together. If you wanted access to a financial world, dependence came with a package. Bitcoin separated those two things. Now a person can decide for themselves. And once people have a choice, institutions have to compete differently. A bank can no longer rely entirely on being the only games in town. It has to provide values. It has to offer services people genuinely want. That's a healthier relationship than one built entirely on necessity. Something else happened while I was thinking through this. I started noticing that Bitcoin's critics and Bitcoin supporters often argue past each other. One side talk about banking service and the other side talk about ownerships. Those aren't even the same discussions. A mortgage and self-custody solve different problems. A business loan and permissionless asset solve different problems. And customer service and monetary sovereignty solve different problems. When those ideas get mixed together, the conversations turn into confusions. So if somebody asks me whether Bitcoin is replacing banks, my answer would probably surprise them. I would say no. At least not in the way most people imagine. What Bitcoin challenges is the assumptions that a trusted intermediary must always stand between you and your money. That's a much narrower target than replacing every financial institution. Yet, in some way, it's also a much deeper challenge because it touches the foundations underneath the entire system. And maybe that's why this topic keeps coming up. People recognize that something's important is happening, but they struggle to put their fingers on exactly what it is. From where I sit, the biggest shift isn't technological, it's philosophical. For the first time, ownership in the digital world doesn't automatically require a gatekeeper. Now, whether someone uses that capability or ignores it, it's entirely up to them. But now the options exist. And once an option exists, it becomes very difficult to convince people it was never needed in the first place. That's why I don't think Bitcoin's story is really about replacing banks. I think it's about introducing a level of choice that previous generation never had. And if that turns out to be true, then the next question becomes even more interesting. If Bitcoin is giving people more control over their money, why does the market still behave the way it does? Why do prices swing so violently when the underlying idea seems so straightforward? Because that part confused a lot of people too. And the answer has less to do with the technologies than most people think.